Hello, I'm Nick Wilwerding, CEO of Bridges Trust, and I appreciate you taking time to join us for our Take Stock discussion, where we'll share our latest perspectives on what's shaping the investment landscape and how we're thinking about portfolio positioning going forward. In this update, Jack Holmes, our Chief Investment Officer, will touch on recent market developments, key economic indicators, and some of the themes we believe will influence investors in the months ahead. Our goal is to help you stay informed and confident as markets continue to evolve. Before we begin, a quick note on important disclosures. The views and opinions shared in this recording are those of Bridges Trust investment team and as of the date of publication. They are for informational purposes only and should not be interpreted as personalized investment advice. Markets can and do change, and our views may evolve accordingly. For guidance specific to your individual goals, please reach out to your Bridges Trust relationship manager. All right, Jack, let's now turn to the current environment and the key trends influencing today's capital markets. So far this year, we've had plenty of headlines driving market swings. When you look at this chart showing decades of crises and recoveries, what perspective should investors and our clients keep in mind before making any decisions?
Thanks, Nick. Yeah, looking out over the last 50 years, it's really just a reminder that, geopolitical events seem very important in the moment, but in the fullness of time, they often matter quite less. And, this year's been a lot of very similar to last year in terms of very strong underlying momentum going into the year and then sort of being derailed by some external factors that we were not expecting. So, again, it matters for a lot of things, but it matters a little bit less as it relates to the stock market over the long term. Really fundamentals matter most.
And building on that, despite our ever-present wall of worry, earnings expectations for much of the market have actually moved higher this year, with estimates for both 2026 and 2027 trending upward. What does that tell you and the team about the underlying strength of corporate fundamentals? And how should investors, our clients, reconcile the short-term volatility swings with this longer-term earnings outlook?
So there really hasn't been much of a revision downward for earnings. In fact, they've actually been revised upward. And your typical year, you see degradation in estimates throughout the year. It has not been the case for 2026 and looking out into 2027. So there's a lot of uncertainty regarding what's going on elsewhere, but as it relates to, fundamentals underlying the market, it's still very strong. And I think if you look historically, when you had energy shocks, there was, oftentimes earnings were already decelerating going into that, and that momentum kind of carried through and was accelerated by the external factors. This year's quite different, where earnings are very strong, so it hasn't had much of an impact quite yet. We might see that change as we get through Q1 earnings season, but so far, so good.
And finally, let's go a little deeper. When we look at valuations across sectors, specifically the technology sector, we've seen meaningful compression in their premium relative to the broader market. How should investors, how is the team interpreting this shift in sentiment? And then where do you all see the most compelling opportunities today?
So there's a lot of opportunity with artificial intelligence as it relates to the economy and earnings, broadly speaking, but there's also a lot of disruption risk out there, specifically within the software segment of the technology sector. And you really see that reflected in valuations over the last 12 months. Technology companies have seen a big revision downward while fundamentals remain intact, right? So it's really been all sentiment driven, which is resulting in much cheaper valuations for technology companies. The opposite is true for industrial companies, which are, seemingly more insulated from some of the disruption risk that's out there. So we're looking opportunistically, but we're very cautious in that there's a lot of companies that will not navigate this transition as well as others. So, but we are seeing more opportunities today, despite the market being, just within a few percentage of an all-time high.
Well, Jack, thank you once again for sharing your perspectives in this edition of Take Stock. At Bridges Trust, our team remains focused on helping you, our clients, navigate capital markets with discipline and confidence. We appreciate your continued trust and partnership. So on behalf of all of us at Bridges Trust, thank you for listening.